Welcome to Money Hangout once again. Every week we talk about a question which is top of your mind, try and answer as many questions that you may have, and help you understand mutual funds better. This is brought to you by Birla Sun Life Mutual Fund and Value Research. Today we are going to pick, we have picked one question which most investors are asking today. Uh, how to invest in a hot market, or what to do now in a sense. Because the people who are invested, they are worried that they are sitting on hefty gains, and if the market corrects they will lose money. There are investors who pulled out, and it is getting very hard for them to get in again because they are waiting for the correction. There are people who are waiting for to get started, and it's not easy for them to get started now if they have done all the waiting. So how to deal with this? Is it time to sell? Is it time to buy? What should you do now? And I don't think there's an easy answer, but it all becomes easy if if you are able to define what do you want from your investment and what is your investment time frame. Uh, Markets will always be like this. They are volatile on a day-to-day basis. Within a day, they are volatile. Even on a medium-term basis, they are volatile. It is very hard to guess and overcome the dominant emotion that prevails in the market. Markets are either euphoric or they are going downhill, and extreme pessimism and extreme optimism is generally prevails if you look at a certain time frame. But investors, if they actually get carried away by that, it'll turn out to be very disadvantageous. All that you have in your control, and nobody has a control on this. You can't do much about what is the prevalent mood in the market, and that is something which is a big influencer. But what you have in your control, and you have absolute control on, is your investment time frame. If you are investing for 3 4 years, 5 years and more, then then only you should consider investing in the market, otherwise not. And investing regularly is the only other discipline that you can enforce to reduce your risk, or manage the volatility or reconcile with it. If you have these two variables in place, then whether the market is hot or cold doesn't matter. It absolutely means nothing for an investor who is investing for 10 years, 5 years and more. uh, so uh, if you have these two variables in place, which is investing regularly and investing your long term money, then state of the market doesn't matter. Maybe you should go back and stop watching market very closely on a day to day basis, because it is of no material significance to you. You can If you are investing for an investment time frame, then it just doesn't help. In fact, it will help if you get lucky with a market correction, that you will be investing cheap, you will be investing at lower levels. But you never know, the markets can be rational, or maybe be overheated for a long period of time, and if earnings catch up, there may be no correction, and that is a possibility which can't be ruled out. At the same time, convergence of some bad news might translate into huge correction, and till we have that convergence of a set of bad news, no calamity happens in the market. And even if a calamity happens, just take a look at this particular graph. This is the first graph, is the Sensex over the last 30 years, and we have had nearly about every 5 years or so, we have had this big calamity. One was in 1992, the great Indian scam led by Harshad Mehta, and looked like the market is coming to an end. The market did go up in a hurry to 4,000 levels from 2,000 in no time, and then it corrected. And that was the time when Indian economy also opened up. We had a lot of calamities. We had a lot of businesses which were becoming, which were not competitive enough. The Indian economy was thrown open for private, was opened up for any kind of competition. Then we saw the 2001 2002 crisis, the technology, the Y2K boom that we saw. The technology companies led the market. They corrected heavily and looked like the market was coming to an end. In fact, I recall the launch of Mutual Fund Insight, our magazine, and the market was at 2800 points in October 2003. So looking at that level, it looked like market has gone nowhere over the last 8-10 years, but that was for a brief period. And then we saw it not very long back. Of course, now it is 9-year-old story, the global financial crisis. Some people will recall it that the whole world was coming to a halt. The markets were crumbling. Big investment banks in the US were going down. The Europe was in doldrums, and we saw looked like market this calamity. How we will be able to get past this. And looking at this long history, we understand that it doesn't matter if you are a long-term investor, and even if you're a medium-term investor, 5 years and more, uh, being invested and continuing to invest through these bad times was just as important. But we are talking of a different story. Uh, we are talking of a story of a situation that the market is at an all-time high. The Sensex has already crossed 30,000. The Nifty is approaching 10,000, and we don't see and the kind of inflow that is driving that is coming into the market, the way optimistic investors are pouring money, it looks as if it will be a missed opportunity if you are out of the market, and rightly so. So listen to, remind yourself of the two rules. Do you need the money in next 5 years? If you do, or if you're likely to, and if you have achieved your goal, take your money out. Otherwise not, stick to your plan. Look at the other two graphs that we have. Sensex observed daily. So this is what you see here. But if you look at it from a 5-year perspective, if you invest in the market and see the market every 5 years, the big calamity that we mentioned, the three calamity that we saw in the market in the last 20 years, 25 years now, no, maybe, 25 years, taking the first calamity in 1992. Of course, the build-up of that was, in 1990, was that these calamity actually don't look like calamity. The general direction is up, and the interim volatility, the moment you take out, you end up being a winner. So discipline pays, patience pays, and staying on course is hugely rewarding. So stick to these basic rules. The and if you are investing for 5-year time frame, even if you are faced with a big correction, it doesn't matter. uh, you will you will be able to navigate that, use that as an opportunity. And of course you will have some regret that yesterday your money was worth this much and today it is not as you don't have as much worth of your investment, but it doesn't matter. Over a long period of time you will be faced with that situation. In fact, the corrections are a very natural part of the market, and it requires a magician to be able to call the market perfectly. And I haven't come across any professional investor doing that. In fact, you are a beneficiary of the market only if you stay invested and continue investing your long-term money regularly.